Hey, good afternoon, everybody. Happy Friday to you. I hope you've had a great week. This is your market update for January 20th. So after a couple of less than stellar days in the stock market, we've had kind of a reversal of fortune, if you will. Not anything substantial, but nonetheless, we do have a positive day so far. So Dow is currently up 64 points. NASDAQ and S&P 500 both up on the day as well. Mortgage-backed securities initially started off the day today down 11 basis points. But then basically off their opening levels, we're down at one point in time 31 basis points, but have rallied back a little bit, currently down 16 basis points. So I don't think that's anything substantial, nothing to worry about, not any kind of reversal of trend or anything like that. I think it has a lot to do really with basically a rally in treasury yields above a resistance level. And that's basically forcing mortgage-backed securities to sell off a little bit and give up some of the gains that we've had, off the positive days that we've had as of late. But again, I do anticipate that that's not a reversal of a trend, an improvement in interest rates and rally in mortgage-backed securities that we've seen over the course of the last week or so. Well, I mentioned yesterday in my update regarding the Federal Reserve having some ammunition to continue to be aggressive in their fight on inflation and their hikes, the Fed funds rate hikes, due to the resiliency in the job market. And just to kind of elaborate on that a little bit, if the job market remains resilient and less people are filing for unemployment, more people are actively, employed, having good jobs. You'll see wage growth, and a solid job market can ultimately lead to increased demand from the consumer, which is, of course, if you have high demand and low supply, that is a key contributor to inflation. That is basically the definition of inflation. So the Federal Reserve, that's one of their concerns, is if the labor market continues to be so strong that the consumer will continue to spend, the demand will continue to be there, and that will negate the impact that they're trying to have on bringing inflation numbers down. So just to give a little background on what I was referring to, or kind of what I meant yesterday when I was talking about the resiliency in the job market and how that could basically lead to the Federal Reserve continuing to be aggressive in their stance on inflation and being aggressive in the rate hikes moving forward. So hopefully they're looking at the big picture, not just the labor numbers, but that is certainly an important thing that they do look at. Nonetheless, I hope you guys have a great weekend, and I look forward to seeing you on Monday.